Hey everyone, welcome to the Y-Axis Pod. Today I have a friend, a special guest, Dan Matuszewski. Dan was one of the first guests I did on my first podcast about 5 years ago, so I've known this man for quite some time. He is a co-founder and principal at CMS Holdings. They are an active trading firm as well as a venture firm. They do a lot of activity in crypto. They have been for a long time. Dan is also a absolute crypto OG. He was running Circle's trading desk back in 2014. He's been in the space for a long time, so it's kind of always a pleasure to get you on and pick your brain, Dan. Thanks for coming on.
Thanks. Yeah, it's been a good decade now, but it's still fun.
So what are you guys doing these days? So, I've been closer to the activity you guys have been up to on the venture side in the past and on the trading side, but I feel like you guys have been a bit more quiet, and I'd love to hear kind of what the CMS focus has been.
Yeah, I guess it's been a little quiet. I'd say on the liquid side in particular, there's been a lot less going on in like the last couple of years. Besides like hyper liquid, like there wasn't a ton going on, I guess, like in sort of the linears perps, like there was still like volume, obviously, right? Like Binance still puts on like big numbers, but I'd say it's gotten harder from the US from an access side, which we've like managed, but like also a lot of things have gotten like arbed out, right? Like what we used to do historically when we borrow a lot of money and trade like a bunch of basis or do like farming and stuff like that market's kind of gone. A lot of that is a function of like the bilateral lending market's gone, right? Like every one of the counterparties we would borrow money from is just toast. And that has cut back on like you have like a hurdle rate of like edge that you need to like do a trade internally. And if you can borrow, you can obviously like do much more, right? Because like your hurdle rate is then just a function of the interest rate. But like considering that you can't sort of lever up in that capacity anymore, it's cut out a lot of that like universe of sort of trades. And some of the stuff's gotten commoditized, right? Like Athena and the basis trades sort of did get commoditized. Farming and DeFi like in general has just like gone. There's been like a lot of like just speculation still. Like the meme coin stuff is like I'd say hard as like a tradable asset because a lot of it is just gambling. Which is fine, and there's like nothing to say against that, but like there's not like a coherent strategy that you're necessarily putting across that. We did some small stuff like on chain with it where there was some edge, but like we're not smart enough to be doing like MEV and like getting involved in like that part of the execution layer. So I guess yeah, it's been like quieter on that front. And the venture stuff's been pretty consistent time, like the amount of like checks and sort of like the sizing. It got quiet in 22. But other than that, like a lot of stuff like hasn't launched. So like a lot of stuff has just like sort of been incubating for 23 into 24 sort of period. So we're still out there. And like we'll ramp it up accordingly. But if you look at the liquid market cap, like it's also kind of flat now since like 2021, like especially ex-BTC. I mean, like Saylor's done a tremendous job pushing that thing up, but like everything else is kind of flat. Like forest from the trees, like a ton hasn't really happened in a while. So I think that's kind of where we're at.
That's a really interesting perspective. I think the thing that stood out to me the most is just mentioning all the lending being gone all of a sudden from the market. And I'd love to hear a little bit sort of, would that just basically convert into more risk on that we don't see anymore from all the different participants who could access that capital? Are there other effects that we're seeing in the space because the lending markets have gotten so difficult? And do you think there will be a reignition of that in some capacity with perhaps stricter collateral rules and whatnot?
So I'll say this, like you've seen TradFi inclusion of like Bitcoin only really, but like it's maybe broadening into like some other assets. That has like opened up the lending market to them, right? Like Saylor in particular, right? Like he's been able to borrow a ton, but there's I think like a dozen or so companies that are now like effectively borrowing to like sort of lever up and buy Bitcoin and like various sort of different strategies. But that doesn't, I think, affect your rank and file sort of like person who's like crypto native. Like that borrow, I don't think is coming back. I don't think there's like any trust still in that setup. But I think you'll just see more TradFi inclusion into like lending products that are, like I mean Coinbase has now got I think a lending product for Bitcoin that they like spun up with participation from one of the banks. I forget who's like actually the end money sort of on that. And like Goldman will lend against your Bitcoin. Like most of the larger sort of banks have like some offering or some like thought of like how they'll like extend credit in that part. But like the just like people want to like trade alts and like lever, like that's gone. I think that's like not coming back. I don't think there's like any risk appetite. I guess like Maple's kind of the only one that's like kicking around and doing stuff. Galaxy will do a little, but their collateralization is really high, so like it tends to be. But the idea that you can just get uncollateralized borrow is gone, as far as I've seen. Or at least it's not being extended to us.
And before Luna, before FTX, was it pretty ubiquitous where you could just show up and it would be really easy to get capital?
No, so it was hard to get capital, and like the market was like very tight up until I want to say summer of 2020. Like when DeFi summer took off, and you had this immense like need for borrow, and there was like yield for assets that was like non-trivial. Like it created this like market, right? So like suddenly all of these desks started facilitating it. Genesis was always around, but it was much smaller, and it got like way bigger. Celsius got huge. And then you had BlockFi too get like really big. That was a function. A lot of like people wanted to lend their assets and they needed to find a place to put it. So like you had, and there was like only so many people that could like borrow it. So that pushed sort of the risks way out the curve. So like people were willing to extend credit for like wild amounts to like sort of anybody. But in particular, like a dozen firms or so were just getting tons of it like inundated on them. That has now like reverted and come back, but like that was an aberration. Like that wasn't like the normal. It wasn't like that for the 10 years preceding that or whatever, right? Like the history of crypto, like credit was like nothing, and then it exploded, and then it ended poorly, and now it's like back to like sort of being nothing. So I think it really just reverted to the mean.
And you touched on more traditional avenues through which people are getting capital, like Saylor with his convertible notes, perhaps other large TradFi institutions. So they're able to get borrow, they're able to get more of this capital. Do you think that as they participate more in the market, it'll be a little bit harder for the very crypto native firms to sort of match the ability that they'll have through the traditional system? Or will the edge of just having the knowledge and understanding of the space always be sort of a cutout space for firms that operate just within crypto?
I don't think one's cannibalizing the other. I think what you're seeing sort of is the market bifurcating a little bit. Like you have, and it's sort of like right now it really just feels like Bitcoin, but like it'll probably be like 3 or 4 things that like sort of like cross the Rubicon and like get into that TradFi world, and then there's just going to be everything else. And I think like those will like exist more as 2 markets like as time goes on, and like maybe things like get big enough and they get like pulled over. But the rest of like the long tail of like there'll be like crypto and sort of like Bitcoin, right? But like Bitcoin would be like a couple like things. It's not going to just be Bitcoin. But I do think like that's like starting to like split. And I think you've seen that big time over the last 12 months is like the market very much like becoming 2 different things, right? Like it used to be like a ton of money spills into Bitcoin and then it like bleeds into alts, but like you just don't see that same sort of like effect anymore.
That's exactly what I was going to ask you is, do you think these large firms will go into that area of the field? Will they will Citadel spin up a desk and go trade altcoins and sort of farm DeFi yields and farm MEV and trade there, or is that pretty unlikely and they'll stay with the majors?
I think they'll trade anything that gets big enough, and that they think that they can like discernibly like pull edge out of. I don't think there's like any moral sort of like thought of like I won't trade Cardano because it's like Cardano. I think like if it gets big enough and it's like volatile and there's like edge there, they'll trade it. As far as like going on chain, I think that'll probably be a little bit longer. I don't think they will for a myriad of compliance reasons, and also the risks are really hard to quantify, I think, for them. And then you see stuff where like random entities just get like popped for like big money, and like that just like also slows down that conversion over. So I'm skeptical about them coming on chain, but I think they'll trade everything that's out there. I think they already are, a lot of it.
Now that we're seeing some of the changes towards crypto in general from the current admin, has that changed anything for you guys where you've been sort of operating out of the US for a long time? Anything new or everything sort of the same?
I'd say so far, like everything's the same. But for companies we've invested in, it's materially important, right? Like I think there's a lot of people that were pretending effectively to be abroad that are like sort of no longer doing that. And I think like you're seeing at least the beginnings of people opening up more access to like US participants. Like you're not just like seeing like the floodgates sort of open, but like you're seeing like airdrops like are less likely to like restrict US users. Like the VPN restrictions have probably like come down for like accessing some of this stuff. I think there's a little more risk tolerance to be able to like face US folk for stuff. And like people are like who are actually domiciled here are like saying that they're domiciled here instead of sort of doing this fake like being overseas thing. So that's like the big thing for us. But like at our direct day to day, like no, like really not much has like changed.
Yeah, I've seen a lot of the founders sort of publicly announcing, hey, we are in the US, our team is in the US, we've been paying US taxes. Do you think that there will be a material shift where those people will see themselves benefited, or it'll just be they'll have the allowance to operate without getting bothered too much within the United States?
Yeah, I think it's that. And I think they've already been here, right? So this is more just like owning up to it, sort of. I think like there's not, I think, going to be this like big move of like foreign, like Binance isn't suddenly going to come and like set up in the US, right? Or like OKX or something like that. But I think like firms that are like here are going to like continue to stay here and like probably support it a little bit more and like be a little more vocal that they are here. So that's, I think, the good thing. And like people that are looking to set up new companies will hopefully stay here. That I'm still like unclear on because like I'm not sure what like legal guidance people are giving. Like there's been a lot of lip service like paid to this stuff, but like I'm not sure how much actual legislation has changed or if at all, really. Right? Yeah. Like just because the SEC is choosing not to enforce right now doesn't mean like they won't in 5 years, right? If there's like a regime change.
Yeah, that's the hard thing is just you never know what's going to happen down the line if the party that's in control loses, and then you've set up your whole operation in one place, bet at all the cards on the table. But at the same time, I hope that the U.S. does become a place where these founders can bet everything on, because it would be a big shame if everyone kind of gets pushed out to Asia and other parts of the world.
Totally.
Yeah. Sorry.
I think you need actual comprehensive legislation out of Congress to like get people to feel comfortable that this isn't just like a one-term sort of like executive action whim. The problem is like there's just not a lot of buy-in to get anything through Congress related to crypto. Like maybe we'll see a stablecoin bill come through this thing, but there's really not a lot moving on that front.
What's your sense on capital markets on the venture side in crypto now with stuff opening up? Will we see the traditional capital allocators start allocating more into crypto? Will they try and kind of compete on that market, or more so focus on the majors, again, have liquid access to Bitcoin?
I think it's going to still be on the majors. I think like the like crypto venture in particular has been like kind of a bad asset class over the last like 3 or 4 years, right? Like there's been a lot of like the returns definitely aren't mirroring the major like liquid ones, and like they're probably like some of them even like just outright like some of these funds are probably just outright down now, sort of over the same time frame. So I don't think there's like a huge market opportunity that like people think they're missing out on there, right? So I think that drives things even more so than like, oh, like suddenly this is legal. It's just like the returns are not good. So I think that's going to continue to like weigh on it. I think it'll still be through just the majors.
Is what happened there that a lot of these guys who just raised at the end of 2021, early 2022, and then allocated at very high prices, or sort of what's the scene there on the venture side where people are down quite a bit?
Well, I think like the market ex BTC is just down. I think it's just like in general, there's just like there's not been like a flow of capital that followed behind that was like interested in buying these things higher. Like kind of across the board. Like you've got like pockets of like activity that have done, but in general, stuff is like not reclaimed their old highs, and like stuff is just like even just straight up down now. So I think that like drags on it, right?
When people were talking about the ETFs coming out, they were talking about the same thing you're saying now, which is that, you know, all the focus will be on Bitcoin, especially since it's not tokenized and it's going into stables very quickly and then into alts. We're not going to see as much of those trickle down effects we've seen in the past. I saw some of the counter arguments being like, well, there are a lot of Bitcoiners with a lot of money. The more money their Bitcoin is worth, the more they want to go out the risk curve on these different altcoins. Do you think that's true, or do you think really it's just going to be complete sort of Bitcoin dominance for you know extended period of time, maybe forever?
Well, I guess I'll say this. I'm not like necessarily like I don't like think dominance is just going to keep like growing higher forever. Like I do think like there'll be. But I don't think it's like a wealth effect from like Bitcoiners make a bunch of money and like buy alts. I think it's that like retail makes a bunch of money, like, or they see Bitcoin go up and they're like, oh, this other thing might go up more, and they just like sort of like pivot to it. And like investors do it too. Like it's not just like a retail thing, right? Where it's like you start sort of being like, well, like if this gets to this like valuation, which is relative to that, right? You start using that as like a yardstick of like, oh, like Ripple's worth 200 billion, or I don't even know what the hell it is, but like right then like, oh, this could be worth sort of more. So people do that, and that like drags like sort of stuff like higher, and then stuff gets momentum and like. But I think a lot of the like retail speculative fervor of the last like year has been like sucked into like meme coins. And then I think there's just no buy-in from larger chunks of capital, like high net worth individuals or small funds, because their returns have been so bad on the stuff that they're in that they're just like not looking to like add any more into it.
That was going to be my next question, is if you think there has been retail, which, you said they're in the meme coin space, and do you think they've just been toasted and lost a lot of money, sort of didn't allocate that elsewhere? Or why do you think we didn't see sort of prior cycle effects where people go from one sector to the other, the hot ball of money analogy?
Yeah, I think a lot of it was like the meme coin stuff. I mean, like also there was some big inflows. Like Ripple did have like a massive move, right? Like there like was some big moves, and like the alt, they just like weren't of the same magnitude as we had like previous cycles, right? Like if you look like in 2021 or whatever, like the last real run that we had before this, like things went up like 5-10x, right? Like Bitcoin even went up, call it, I don't know, 10x or whatever. It's like we really like this cycle around, like Bitcoin hit a new high, and that's like kind of it. Like everything else like either flirted with it and like came back, or is not even like reclaimed sort of an old high. So like there hasn't really been this like big push of like sort of like capital that there was in like previous cycles. And then you look at something like 2017 where things were like flying up 50, 100 sort of like X like returns, right? Like it's nowhere near that. So like things basically reclaimed. Like Bitcoin's what? I don't know, call it like 92,000 like as of this morning. And where did it top out in 21? Like 60s? So like, yeah, I don't know, it was 50% over 3 years. Like, and I get you're doing a high to a high sort of like mark, but people expect like multiples. Like people who are looking at crypto as like something they're going to go like allocate to, like expect like more on the return side, on the upside.
So what's going on? Why do you think that's the state of the world right now versus sort of prior cycles? Is it just early? Do you have a read on it, or an opinion?
I think it's early. I think that's part of it. I think like a lot of this is just like going to play out. So I think that's like a big chunk of it. And I also think a lot of these asset classes have gotten so, like some of these things have just gotten so big that it's just going to be like harder to move them like going forward. I think this is just like a dampening of like returns, like as like a function of just getting so big.
That makes a lot of sense. And it doesn't help that the new entrants don't want to come into these big things. They instead want to go see if they can like get a pump fund coin off the bonding curve or something.
Yeah. I think that will probably die on the vine over the next like I don't think that's like a long-term phenomenon that's going to be here. And I think already people are just so angry. Like everyone in there has gotten toasted. Somebody's saying like of all the things that have like launched on that thing, there's only like 15 names that are like over $10 million or something still. As some like ridiculous
stats,
like
the stats are really bad.
It's terrible. Yeah. It's like a wood chipper. So like I don't think you can only like do that much damage to like a group of people so long. So I don't think that's like got much left in the tank.
I think in the early days, maybe like a year ago of this meme coin cycle, there was quite a bit of edge where retail could come in and find some stuff and maybe make some money and it would go okay. But too many people saw that and started getting very opportunistic, and just I know a lot of trading firms that just launch a lot of meme coins or individuals that launch a lot of meme coins, and they spread a bunch of wallets, and so it's no longer like any of that organic effect you were seeing prior. It's just made to extract as much money as possible.
It's very become like you're sitting there just knowing you're so stacked against you, like you have no chance.
Yeah, it's worse than the lotto. I think
for sure it's worse than
way better than the lotto ticket. Odds now, I don't know how. And what do you think? Okay, so Pump Fund has made $500 million of revenue or so in Sol, right? And they've just sold that to USDC.
Right.
How do you view that? I see conflicting opinions. I see some that all the activity they brought to Solana, way more value than that 500 mil. Doesn't fucking matter. Who cares? And then I see the side that's like, oh, they've extracted 500 mil of liquidity from the ecosystem. It's been terrible. It's actually dampening the activity that we have.
I don't know. I mean, look, they made like a great product, and like they should take the money. Like, so I don't know. I don't view it as like this is an evil sort of thing. I just like. I'm of the opinion this is like a flash in the pan, and this is like not going to be like a long. Like I don't think it matters in the like longer term like vision of Solana. Like I just like I don't like benchmark whether or not like this is like the future of it has like any dependence on like pump funds sort of like activity. Like I think it's like an interesting like thing that happened for a period of time, but like I just don't care about it at all going forward. So I don't put a lot of stock in it either way.
And when you look at the market right now in general, what do you pay attention to? Is it mostly ETF flows? Is it Yeah.
Well,
What are
the
you looking at?
ETF flows are hard because a lot of them are basis trades, so a lot of them are like hedged out. So like the outright flows like actually don't like are hard to like get a heuristic on now of like what it means in terms of like level of activity. I like there's a couple things that like we like key in on pretty hard. Like interest rates is like a function of like where the curve is like big, just to like show like a level of sort of froth that's like in the market. And then we're just like looking at volumes of sort of stuff that's out there. I think that's like your biggest tell still of like where interest sort of is. But yeah, I mean like the ETF flows matter. Like there's definitely in there like real sort of like flow. They're just like very noisy because of like the basis that's like traded with them. And then the other thing that's like important is just like what is like Saylor doing? Just because he's such like a big part of the market now.
Yeah, yeah. That was actually gonna be my next question for you. Is how do you view everything that he's been up to as a part of the market? Obviously, there's this tremendous buying pressure that's come from it. It's driven up the price a ton. Do you think it's a fantastic trade that he's putting on? Do you think there's a decent risk he blows up? How do you sort of put it on the risk curve?
So he doesn't really have like a forcing function that blows him up for a while, right? His debt's pretty far out.
Mm-hmm.
I don't know. There's definitely like a non-zero, like probably a real chance that like this like doesn't unwind great for him at some point in the future. But for now, he's like fine. So it's like I think people in crypto, because their leverage trading experience is like you get blown out as soon as like you hit like a liquidation level, like just like assume that like Saylor's like operating like this came up a ton in 22 in the bear market, right? Where people were like, oh, like it's like down to 60,000, like he's got to get unwound, like they're selling is like it doesn't work like that. Like there's as long as he can like service his debt, like he's fine. I mean, at some point he's like due on it, but he really has nothing in the interim that like causes like an issue for him. So I think the biggest issue he's going to have is he's just so big in the market. And as soon as the market like slows in allowing him capital to continue doing this, and like maybe it goes on for a while, but I think we're starting to see like it slow down and like the risk appetite of like how much they really want to put with him. Then he's got the issue of like, all right, like something else needs to take this thing higher in the future. And like it's so big that like you need like we're getting to a point where like nation states need to start like taking flyers on this thing, and like that's like a hard next iteration of like the whole thing. That's why I think the strategic reserve is probably like massively of importance to him, because like that will dictate a lot of like who buys this thing and supports it sort of like higher. And also the like Bitcoin doesn't have a ton of inflation now, but like at these prices, like it does like matter, right? Like those miners are pulling stuff out that's like got to get monetized. So like there's constant flow still the other way.
Yeah, that makes a lot of sense. What's up with his execution? Why do you think it's so bad?
I don't know. I actually legitimately wondered this myself. Like he like buys the high like print like constantly. Like I don't know if he's part of me thinks that like he's like, all right, like I don't really care, so like just like maximize the impact of it, right? Like I want to push Bitcoin higher, so like just like rip it, and like I know I'm going to do more. So like sometimes I think like he's like purposely getting bad execution because he like wants it. But other than that, like I can't explain it. Like his fills have been terrible.
But yeah, but wouldn't you're a trader, you tell me, but wouldn't the best thing to do be to look at the market, look at moments of weakness, and just shove in the buy at those moments and kind of get over those moments every time they come up?
I think he just wants to keep pushing it higher. Like I don't think he really cares. I mean, he's buying so much, and he just like it's also one of these things where he's like, I don't care about Bitcoin at 100,000 because it's going to 1 million kind of thing, right? So it's like, who cares if I buy at 95 or 97? Like, I don't know. I think that's some of it.
I mean, fair.
I don't know. Whatever. I mean,
if you're that convicted, I mean, he's convicted enough to be raising billions of dollars and funneling in. So.
I don't understand who is still buying the stock at a massive premium. That I'll never like understand. I get it's worked out for a lot of people, but like it's.
I don't own any, but I think it's a lot of retail too, if I'm being honest.
For sure.
I get. Pull it. Oh yeah, pull it up. I get
to see what it is.
I get a decent amount of questions from friends saying like, "Hey, should I buy MicroStrategy or should I buy Bitcoin?"
And, like, I mean, it's just like at this point, it's like you should just turn it into Bitcoin.
Yeah, seriously.
So what is it still trading at here? I'm just trying to see what it's still at to NAV. Well, NAV. It's not even really a NAV. It's what is it? So it's still like at a 60% premium. I mean, all right, no, sorry, 42% according to this. That's really high. Like, who's buying? You're buying Bitcoin effectively jacked up. So I don't
I
know.
mean,
It
people were
persists
buying
though.
the grayscale premium too. I guess, you know,
For sure. Yeah,
people can be
It's
confused.
people buy. Yeah, but this is so much bigger.
Yeah.
Like this is just so much bigger than it. So
It's true. It is so much bigger. And on that topic of just exposure to Bitcoin through trad versus holding your coins, what do you think about people holding Bitcoin non-custodially or on exchange or whatever versus holding it as an ETF? Like, do you think it's wise for Americans to hold it as the ETF? Do you have a view on this?
I mean, part of me is like one of the big selling points of like Bitcoin is that you can like self-custody it, right? Like that's like material. But then the other time, I'm like, most people just are going to get either robbed or lose it or like close. Like I think the ETF is like a pretty great vehicle to give like a regular person like access to. So like I don't know, like I push people who have minimal like technical expertise to just buy the ETF. Because like even holding it on Coinbase, like people like they don't even secure those accounts, right? Like there's countless stories of people like
So
getting
fraud.
taken by some, and the fraud's sophisticated. So like I don't know. I generally try to push people who if they have some technical capabilities, I'm like you should really like figure out how to like hold this, like it's worth it. But if not, like I push them in ETF direction. It's just like it's much safer and sounder for them.
Yeah, I'm on the same boat where I really do try and see if they have the capacity to do it themselves if they can. But on the other hand, for example, saved my mother-in-law from a phishing scam. Almost lost 30K. My godmother almost lost 35K. Was able to save both. Got really lucky that they checked in with me while the shit was ongoing. But it's like, imagine how many people don't have anyone to ask or check in, and the money's just like, whoop. All right.
No, I would be very curious how much like gets taken from like say Coinbase and phishing attempts. It's probably a very big number, and I'm sure there's a lot that doesn't even get reported because people are like embarrassed, so they just don't even like say anything.
Well, I remember back at FTX US, the number one compliance issue by far was that old people kept making accounts, wiring money into their accounts, and then having that money sent out to a scammer somewhere on the blockchain.
Yeah, right.
So if you're an old person onboarding, you'd have to have like, I confirm that I am Henry John Ford III, and I am doing this of my own will, and I'm you know what I mean, and like there's just like all this stuff, and then they still would get scammed. It's like, what the fuck
right, because it is them, right? Like it's not like an account takeover. They're like they're just unaware of what they're doing. Yeah, it's tough. I actually think exchanges get a really bad rap because of the amount of like I don't think people understand the level of fraud that's like constantly pushing through these things. And like, yeah, the experience sometimes sucks, and like Coinbase freezes things like when they shouldn't. But the problem is they're dealing with like a massive problem that you're just like unaware of. Like I think people really don't understand the level of like attack and sophistication that's like constantly going on to the user base of these things, which makes the experience suck if you know what you're doing, but like you got to do something.
Yeah, and it doesn't help that crypto companies keep leaking their email databases, so that makes it so easy.
I know
for
the
these guys
information's
to
out
go
there.
And, like,
I know.
Just like grab your mail list, go to Coinbase, try and register an account with every email, see which ones exist, boom, attack vector. It's like, okay,
it's
great.
bad. I know it's tough. It's a hard problem.
But yeah, I do want to say, and I am like so incredibly excited about everything we're doing here. I fucking love it. But there are these things that need to get.
But if
hammered out.
if you're just like I want to buy $1,000 of Bitcoin, like just buy the ETF. Like that's just like. Just do that. That's much easier. And I think at some point, like the ETFs have been like pretty onerous on like a margining capacity, but like that will change as time goes on. So like it's useful to have it in a TradFi vehicle.
You mean in as much as you can use it as collateral for other TradFi?
Yeah, or you can right. You can get a margin loan against it. You can like use it. Like that becomes like very valuable. Most brokerages don't like give you any margin on it now. Some did. I actually don't know the status of that. I should find that out of like who's allowing it currently. But
that's actually a really good point. Like if you could use Bitcoin for a house loan or something, that would be really nice. I mean, it's really hard for crypto natives to. I mean, as you probably know better than most.
Well, yeah, right. And if you get a portfolio like loan, like the rates are really good. So that's like a much like you can borrow against Bitcoin, right? Like there's like ways to do it now, but it's much more convenient to just do it inside the brokerage.
Did you read the Stone Ridge investor letter by chance?
Yeah.
really well written. I had never written or read anything by him. I was actually very impressed.
Ross Stevens.
Yeah, I thought really impressive. But one of the things he was touching on there is their Bitcoin lending product, and I'm curious, like, do you see these guys doing really well with a business like that, or is it more of an act of service in some regard? Like, will OG Bitcoiners show up and just take $100 million loans, or is that pretty unlikely in your opinion?
That's probably unlikely. I think it's more like smaller ticket sort of stuff, right? I think like the easiest one is like people who do want to buy like real estate, right? Who have like a big portfolio of crypto and they like want to use that against it. I think that's like probably the big one that they like look at. Or people that like don't want to trigger a tax event.
Yeah. And there was the whole dynamic where, especially founders, if they had a DeFi protocol, they could put their token as collateral and like borrow against it and stuff.
Yeah.
The avenues. There's less and less of that, is what I'm saying now.
There's definitely, I mean, on the longer tail, for sure. But I mean, like, how many people want to borrow $100 million? Like, there's just not like, what are you doing with it, right? Like,
exactly.
There's not that many people. Like, what do you need? Like, you're definitely like far outside the like pace of like normal consumption, and then you're probably like doing another investment. It's just like there's only so many people looking to do like large tickets, but like there's like real interest in like smaller tickets for like larger groups of people. I mean, Figure was trying to do this too. I think they do have a product. I had looked at it at one point. What they were trying to do.
There's a few of these guys. There's like the Lava guys on chain. I had someone ping me from, I want to say Cantor as well.
Yes, probably. They're starting to. They'll lend Tether in particular against it.
Makes sense. Yeah. Wow, Tether. Before we go into the stablecoins, I have a few questions for you there, Dan. Are you, you've been in this space for a really long time now. Maybe not relative to like our whole lives, but relative to how young our space is. It's been a long time. You've seen the development of so much of this. How do you feel? Like, do you still wake up excited and you're like stoked to be working on this? Do you feel like it's metamorphed into this thing that was outside of what you cared about? How do you feel about it in general now?
It's still great because it's like really interesting, right? Like there's always like some pocket of activity that's like absurd and like interesting that's like going on, right? Like it's great because it moves really fast and like it's constantly feeding you new information. It's bad because a lot of like the original ethos is like gone from like many pockets like of like the industry, which is like fine. I think it's just like a natural like progression sort of it. But a lot of this stuff, like there's just like no care about like it actually being decentralized in any capacity anymore. But the counter is like, it is like fun and like it keeps like moving forward. So I don't know. It keeps it like, look, as far as like the industry, like it's very like stimulating and interesting and like worth doing still. And I'm still here, so.
Yeah, 100%. Do you spend a lot of time on Twitter, on X?
I spend too much time. Yes. I mean, like I've tried to probably pare that back every like year or so, but it's still probably too much. It's just noisy. It's really noisy, and like it's just a lot of people complaining constantly. Like the mood on there is like just always bad. I don't know why. It just is. Like people are just like upset all the time. Like even from ignore the crypto side, people are just fucking angry on there. Just about everything. Yeah. They're angry because like Biden's president, and now they're angry because of some like bullshit with like Trump's. Like they just like they're perennially like unhappy people, and I guess they just like find a voice on Twitter.
That's and you tend to get better engagement by being confrontational and aggressive than by just being chill, and so I think a lot of people revert to that.
Well, and like you spend 45 minutes on like Twitter, and you just like are in a worse mood. Like you just like you're hyped up, you're angry. You don't even really know why. Like you don't even know who any of these people are. Like you don't care about them, but like they're like under your skin. Like it's I think it's fine in like doses, and like it's a good service, but it's like a terrible thing to spend real amounts of time on. That's my like thought on it.
Now that I've been sorry, go ahead, finish your.
No, I think like if you spend too much time on it, it like makes you a worse person. Just factually.
Now that I'm nursing this broken leg and I've just, been couch locked every day for the last, more than 2 months now, I'm spending way too much time on there, and I'm rapidly realizing that, like, while there are definitely nuggets of gold intermixed amongst all the mess, and it's what keeps us there, I think, it's just so much information flow. Probably turning us into like ADHD animals where we're just like,
you just gotta get I don't know. And like people find the dumbest shit to fight about on there. I just like things I just like. It's so weird because like I always try to mirror it to like conversation. Like I think about like, all right, like because I got young kids, right? So like if I go to like a birthday party with my kids, right, and I'm like sitting there shooting the shit with like the other parents, like that conversation is so different than like what's like happening if I'm like just like on Twitter, in the sense that like nobody's talking about any of the same shit. Like nobody cares about any of this stuff in like the real world, but like you have to have like really strongly informed opinions about like nuanced topics that you could care less about, but like somehow like are what you need to fight about in the comments. Like it's the most important thing ever to you. And I'm not saying like obviously like those conversations are dull in real life, but like people are like pleasant. Like it's like I don't know, it's just different.
Yeah, it's fucking internet, man.
I don't know. The internet is people seem to enjoy it, but it does work you up.
Yeah.
But yeah, I like crypto Twitter is just like a mess.
Yeah. Do you anyway, the thing I was going to ask you on that too is, do you think it's still a source of alpha for people that aren't sort of in other parts of the information flow of the industry?
Yes, it's good because it like lets you know like what the market is and I don't say valuing in like on a relative basis of like what like attention is being like captured in the market at any given time, right? Like the problem with crypto now is it's not a problem, it's like just it's the function of like time, is it's gotten so big that it's hard to like really understand what's going on everywhere. So like crypto Twitter is a great way to like be like, all right, like at least like there's enough conversations about this thing, and like I have no idea what it is, but like probably need to figure it out, right? Like, and I think like that's like what's like interesting is like I for sure would not know, like you're in group chats and like you like people like give you information flow, but like even a lot of that's like coming from Twitter. So like to know where like 100%. The attention is,
it's like all
right.
Fucking Twitter. It's all
right.
just...
You're probably in like 6 chats where people just put the same links from Twitter like up constantly, which is like hilarious also in itself. But it lets you know like where like activity is sort of like happening at any given time. I think that's like where it's like super useful.
Yeah, that makes a lot of sense. You know, one thing that's interesting, Dan, is I'm just remembering a little bit about our episode, the first one, and I think a lot of the stuff that you predicted on the TradFi side, or the maturity of the market has sort of happened over time. And I know one of the things that you've talked quite a lot about is this hot ball of money that basically jumps along these Twitter narratives or whatever's catching the most attention. It'll move from one to the other. But you also just mentioned that now there's a variety of different sectors in crypto. There's so many, it's kind of impossible to keep up. Do you think that dilutes this hot ball of money, and also is one of the reasons that we're not seeing sort of these explosions in each of these sectors as much?
Well, yeah. I mean, like the amount of money hasn't increased really, but like the amount of things to pay attention to has, right? So like everything's like grown horizontally. So there's less to be spread amount. Like, unless like this is the thing, right? Unless there's like a material sort of like influx of like new capital, but there hasn't been. So like, yeah, I think it's dilutive in that for effect. I think you're seeing this like why like a lot of new issuance has trouble, right? Like things are like opening sort of at last round or like lower because there's just like there's not like a sustained bid coming from anywhere else in the market.
On that note, how would you sort of if you had to advise a crypto company that's gonna launch a token, they're raising, what do you think the positive way to hit the market is right now versus like where people are coming in really expensive and whatnot?
A lot of the projects are tied because they raise money at higher valuations. I think like that's part of the problem, right? Because really what you want is like you want to have cheap cost basis units in the market so that like your user base and your consumers can participate in the upside, right? Like all right, take like a totally just like random token. Like let's say this like token A is like probably like in the market like worth $3 billion, just for math here. And you raised it 4, right? Now you've got this like problem where like your investors are like underwater, but they don't want to hear it. So like and you're going to go out there and try to get it as close to like 4 as possible. And then everybody who's going to buy it is going to bleed out on it. But instead, if you launch it at 500 million and you let it grow into its valuation that's like potentially higher, then suddenly like everyone participates in the appreciation and like they're happy and they're like advocates, and they're like if you look at all like the big assets that have like done well, like Solana in particular is a great example of this, right? Like everyone pretty much participated in the upside of that thing, like as an asset, and like that's why you have so much diehard sort of like interest in it. But if it had opened at 50 and like traded down and then grew back into it, like nobody would care. So like I think like that's part of the problem is like not enough like cheap units are like in the hands of like the market in general. So I don't know. And a lot of this like comes back to the fact that like people just raised it like jacked up valuations. And then you have to like continue that going forward. And nobody wants to go out at an 80% discount.
Yeah. Yeah. It's like the Silicon Valley. I don't know if you've ever seen that clip from Silicon Valley episode on up rounds. I'll send it to you after.
Send it to me. Yeah. And I think a lot of, I don't know. I think that's the biggest thing you can do to like ensure your success is to like let your rank and file sort of user participate in the upside.
Yeah, 1,000%. I mean, that's what builds the strongest communities in crypto, without a doubt. And yeah, I think one thing I've been telling some of these companies that I'm speaking to is if you can raise at a lower valuation and get enough runway to sort of be comfortable on working on what you need to work on, it's not always a bad place to be in. You might have a little bit less cash, your valuation might be a little bit lower, but you have a lot more flexibility on what you can do going forward.
So it's tough though, right? Because then like people are like, well, like this is where like people do the benchmarking. They're like, we think we're better than X, and X is at this, and it's like, I don't know. You get a lot of that going on, which is like a problem.
Yeah,
it's tough.
And it's tough too because if you're a token project and you know this, and you raised private markets at billions of dollars, even if you want to come out with the token much cheaper, you know your investors are going to be super unhappy if you do that.
Right. And a lot of that means you're flooding supply into the market, and they don't want that.
Yeah, it's tricky. Are you guys working really closely with any cool teams that you're excited about? Are you guys sort of incubating anything, or mostly traditional investment?
I mean, like we're still like, we try to like help wherever we can, like when people like sort of ask. So I mean, there's obviously like varying degrees of like where people get interested. In terms of like stuff that's like coming out that's new, we just like the Monad testnet went out. We've been banging around on that a ton over like the last week. So like that's been like a big focus sort of on
What's
the
your
new.
impression so far?
So like it's hard for me because like I'm just a regular user of it. Like as far as I see it, like it works fast. Like we've had some hiccups with like some of our portfolio companies that are on testnet and like shit breaks, but like we expect that. So like it's giving a lot of feedback. I'd say like generally like pleasantly like happy with it. Like it works. As from my vantage point, like it seems to just like work and things are like quick and like feed like things break, but like it's unclear if it broke because the portfolio company that's like running on testnet did something wrong. Something like we've noticed some of the RPC loads get like overloaded, but like I don't. It's hard for me to like know how much of that is just like that's why we're doing the testnet. We need to fix it versus like there's like an underlying like issue. We don't think there's anything like that. Brian and Bill, who work here on the dev side, are like actually like banging on it like pretty hard, and like their feedback so far has been like basically that some of the RPC like points are like bottlenecks, but like that's like a solvable problem. But like as far as the underlying protocol goes, like things are going pretty smooth. So
yeah, that was my impression as well. Like as a user, you show up, you click, things work as you're expecting it to. Ton of things on testnet, which I hadn't really ever seen before. I think it's like the most stuff I've seen on a testnet from day one. So
they got a lot of the companies like ready to rock on that, which is like pretty good. So we've been just like shit just breaks though, like weird ways, and then you're just like, hey, I don't know why this happened. It did. This is the feedback. This is how you recreate it.
I think, especially if they are successful, which I think they'll be quite successful, they're going to go down. It's just it's a part of all of these blockchains growing in production, and it's funny because it's become such a taboo or stigma for a blockchain to have sort of like any type of liveness failure that I think these new chains are terrified of it. But just to the listener, it's gonna happen. These guys can't grow and have a ton of on sort of like production stuff running and not have issues.
Right. It's just an inevitability. Like especially and also like your testnet's never gonna mirror like live 100%. So there's gonna be some growing pains. So yeah, that's been like a big chunk of the time. We're investors in a lot of this Bitcoin DeFi, which is like these L2s and this other like stuff that's like built on top of it. A lot of that's going to be coming to market over the next 6 months. So I think it's going to be interesting to see like where that shakes out in the.
What are you guys thinking there on as a capital allocation strategy?
Yeah, it's a good one. I think So I have a vision which may be wrong, but like my thought is that like at some point like Bitcoin's going to need to do something to drive up fees. It's just like it can't exist. Like if you like a lot of the blocks have like nothing in them right now. So like there's gonna at some point need to be a push to like build some of this additional functionality on top. I don't think you're gonna be able to do it at the core protocol for the most part. Like maybe some small changes. So this is like where the inevitability of that like outcome. It may just be wrong. Like it may just like not work out that way. But that's like sort of how I think it'll play.
And how do these drive fees back? Because they're just filling more transactions as they validate themselves onto the Bitcoin blockchain. Or
yeah, exactly right. So they'll be like fee paying.
Yep. Makes sense.
We'll see. That's my thought on it. Maybe it's early, maybe. And I also think there's a window here where like there's some buy-in to like potentially build some of this additional functionality on top of Bitcoin. Like it's been tried before in the past and just like didn't sort of like go anywhere. But I think that the ethos has changed a little bit, but maybe not. We'll see.
Like OPCat and the stuff UD's been on.
Yeah, some of that stuff, right? Like that all plays into it.
Right, and then it's how nowadays how do core changes happen? Do you know how core changes happen on Bitcoin? I'm actually sadly pretty ignorant.
I don't think they generally do. But like there's a whole mailing list and like there's like conversations that happen. It's broadcasted very far in advance, and there's like a lot of conversation around it.
Got it. And then there's just like the group of core developers, and they
all fight about it, and then yeah, right, exactly.
A lot of characters in crypto have gone very quiet. Maybe they've realized that there's nirvana outside of Twitter, and so they're not spending as much time on there anymore.
Yeah, I think people are getting old too.
Yeah, having kids and stuff. That's gonna be a big one. I'm excited. What's up with stablecoins, Dan? Like
people love stablecoins.
Yeah, okay.
It's fact. They do. I mean, stablecoin like issuance is just like up, right? Like it's just like there's more of it every month. I mean, it has some beta in the market, but not really. And Tether's been like the big winner of that. I mean, they've been the big winner of that because like they have the offshore market, which is like the end sort of like consumer of all this, and that's where like a lot of it lives. So yeah, they've just been able to massively capture sort of that. People love dollars, like they really do, right? Like this is like the U.S. exporting dollars to like the rest of the world, and like this is just like a really efficient way to do it. Yeah, I don't see that slowing down. The only reason it would slow down is if like there became really prohibitive rules placed on them by Congress, but I don't think that's going to happen in the current admin.
Yeah, I mean it's so fucking good for America too, for there to be more dollars out there and more dollarization all over the world.
I mean, there's a little bit of a fight between USDC and USDT, but like I think in general, like USDT is just so tied in with the current admin, like everything's gonna be fine. Yeah, I think that'll continue to grow. But that's a little bit of like the same thing where like just because stablecoins grow, like yes, the underlying blockchain that they sit on like have more value, but like it's not like if there's $100 billion of stablecoin issuance that like that's money coming into crypto. Like that's very clearly not the case.
Totally. What do you think about the Bank of America stating that they're interested in having a stablecoin? I mean, my sense is all the big five, all these big boys are going to have their own stablecoin. They're seeing how much money Tether, Circle is making. What's your read on that?
I'm kind of scared. I mean, like even PayPal is like stablecoin isn't going anywhere. I think there's just too much of a network effect on those big two. I think at some point one of the banks may look at USDC and Circle as like a takeover candidate as like a way to get into it. But like I'm very skeptical if there's something like a Bank of America coin that's gonna like get a lot of upkeep. Like what could actually be done, and I don't think any of the banks will do it because they're just not capable, is if like let's say Bank of America seamlessly lets you like just interface the USDC or USDT via your bank, right? Like if you could just like send USDC in and out like as you could like any other payment, like that would be big, right? If they could just like suddenly allow that functionality.
And then on their end, they could just hold that as a basket of stables, call it like USD, and then put it all into their own stable and buy treasuries with that or whatever. So they could
totally that would be like a big win, right? Like that could be like how a bank, but like they just won't. They're just like fuck it up. They like there's just no way. It's like then and the fraud's gonna get them. That's like the problem, right? Is like once you like have like a crypto rail attached, like now you have like a huge fraud thing that you have to deal with. Like imagine if like all these like Bank of America like random accounts of like seniors like had the ability to like send stables out the door. It'd be
Totally.
a
Totally.
fiasco.
Totally. No, it would be a fucking mess. Because at least like a fraud wire, you can kind of track down where that wire went, and there's like a beneficiary with the crypto. It's just like poof
I know.
into
I
the
know.
fucking
That's
ether.
that's why I just like can't see them doing it. But
Okay,
that
that's a
could
really
be
good point.
a way that they get into it. I maybe.
And generally, it does seem like most of the world is going to want to keep buying dollars to hedge their fiat currencies, to have
Yeah,
access
it's
to
a
that
great thing to
market.
hold.
Um, do
I
you think?
I
Yeah.
I'm a little surprised that like I understand that there's like regulatory reasons why you can't, but that there hasn't been like any like push towards like paying interest on the like stable coins. Like it's bananas that like Circle and Tether just keep the whole thing still. Like I thought that would have like gotten edged out at some point, but like it really hasn't.
Yeah, 100%. I was kind of working on that a little bit because if you're in an exchange, you want to give as much yield as possible to users for user growth. And some of these newer stablecoins are super gung ho about giving partners a good percentage of the yield, and they can figure out whatever they want to do with it. It's just like a
Mm-hmm.
marketing expense, and then it's on the partner to determine what they want to use that for. Guys like Circle they do very, very, very small amounts. Um, so I wonder, but how do you get over the network effects that they have? Because what you said is really interesting in that it's not so much just having $1 trillion held in a stable, but it's if you can actually properly use it, right? Like if you can show up in the crypto ecosystem and have some usage for it, or do you think it's just it being a digital dollar is enough?
I think so far just being a digital dollar is enough.
Hmm.
I mean, that just shows you how much demand there is for dollars.
Yeah, yeah. And do you think, if Bank of America coin said, "Hey, we're gonna give 85% of our treasury yield to the users. Essentially, this will be a real yield bearing stable coin." They could claw market share from the big boys, or it's
I think the problem is going to be like there's a lot of like holders of those like dollars that just like can't open a Bank of America account, right?
yeah,
Like
and
you
they
can get
wouldn't
in,
the
like if you could
distributions
go
on
buy,
chain.
if you have money in Bank of America right now, you can just go buy treasuries anyway, right? Like you can get that yield.
Well, I was imagining it would be like an on-chain
That's the
drop
thing
the
that like
wallet
nobody's
system.
gotten comfortable with doing, right? Is like somehow like paying the interest out on chain.
Right, because what if it's like North Korea holding it or whatever? Yeah, it's
Yeah,
super hard.
it's tough.
That makes sense. What was the little back and forth you guys had? I saw you and some of the other
In
Circle
Balaji,
OGs with Balaji. What
dude,
happened there?
I don't understand. Like Balaji's like hell bent on like making it seem that he created USDC, which like I like Coinbase was pretty pivotal in the thing, but it existed beforehand. Like we were trading it on the desk. Like we used to like give people if you wanted settlement of USDC, like we would just like give it to you instead. Like nobody really took us up on it. But like Circle had like USDC existed, right? Like you could buy, you could sell it, you could redeem it. It was listed on Polo. It was pretty small still, and like there was a bunch that listed at the same time. It was like GUSD, Pax Dollar, and USDC that like all came out like within weeks of each other. And then USDC really won because Coinbase jumped on board with us, and they decided to like do it. But Balaji like wants to rewrite history and be like, yes, Coinbase decided to create USDC, and then like did it with a joint venture with Circle, but like it existed already, and then they came on. I don't know. It's just like a very weird sort of sticking point of history that like wants to get like fought, which I really don't even care that much. I just like remember. I mean, I was there.
Yeah,
But
just
like,
having
just
been
like
there, wanting to drop a note. I mean, that's one
I
of the
was
nice
there
things
with.
about Twitter. You get to see these interactions that otherwise you'd have no insight into the industry or what's actually happening in the background.
I know, and I remember when we seeded it because like Coinbase took like a huge slug of money to like basically like get USDC to like get it going. Like so we punched an OTC trade for it with this guy Hunter who now works at Millennium at the time, and I remember it as clear as day. We just like just like took the wire in, like sent the USDC, like I don't know, but
Hey, for the
it already
listeners,
existed, like it was already like functioning.
Dan was trading on Skype in those days, which shut down recently.
Skype,
Was that sad
Skype,
for you to see?
God, Skype was pretty bad. Like it wasn't really good at. I mean, I don't know if Telegram's much better actually, like managing, but like when you'd have like a couple thousand chats that you were like managing, like Skype would get like pretty bad. And like messages would miss and stuff like that. So we traded Bitcoin we traded all crypto, but Bitcoin really is a thing from like 2013 till 2018. And I don't know what happened was everybody in Asia used to use WeChat and the US used Skype. And then WeChat had something where they were like, if you were trading Bitcoin or like you were doing crypto on it, like they were like coming after you. So everybody in Asia switched from WeChat to Telegram. And then everybody in the US like started to slowly move to Telegram. And like in that 2018 period, like everybody just like crossed over and we just like switched and like Skype just got left behind. But like it was there for a while.
Damn, up until 2018.
Like we would force people onto Skype basically until then because we were just like there. And I forget why it started as Skype. So I remember one of the first times I talked to Genesis, this was like before Genesis existed, when it was still second market. Like they used to call me, like physically call me. And I had a like job still that I was like regularly working. And I was like, you guys got to stop like calling me. I was like, are you on chat? I was like, is there any way like I can talk to you? I was like, are you on, at the time I was working at the hedge fund and like we used to deal with a lot of brokers on AOL Instant Messenger, which was like still like a thing. And I was like, are you on AOL? And they're like, no. I was like, well, you like on Skype? And they were like, yeah. So like we just started talking on Skype. And then it just kind of like became a thing. And then Cumberland, same thing, where we like needed a way to like talk. We were just like on Skype. And once Genesis started using it, which was second market, like then it like sort of just became standard for like some reason. There's not like a great reason why we did it. Just like we needed to, because they would legitimately physically call me, and I was like, you guys, like I like I'm doing other shit in the day. Like I don't like
I have a job. Don't fucking call me.
Yeah, like well, no, I was like, I can't be like doing this. Like I'm not gonna pick up. So then like that just sort of became a thing, and then it stuck for a long time.
Back then, how did you go from that hedge fund to Circle or to crypto in general? What caught you?
It ran up in 2013 from like $10 to like 1,000, like pretty quick. Which was like interesting, but like also when it ran up to 1,000, like a lot of people started like coming out in favor of it. Like there was a whole batch of Silicon Valley people that like sort of like said it, and there was some people like even in TradFi that were like, and I was like, all right, this maybe like has some like legs as a thing. Like it died after that, like Mt. Gox like subsequently like implodes, but it was enough that I was like, all right, like I can take a flyer on this. I was like very young. I think I was 25 at the time. And I was like, I can take this like risk. And I went to work for Kraken first out in SF. So I was there for a little bit and then landed at Circle back in Boston. But yeah, it was really just like, I was like, I think this has got some legs. Like, I think this can be a thing. So, cause like I was trading it in the PA and like fucking around with it earlier, but like all the money was like really small until like really that first like leg up in 2013. I was like, oh, like there's some like, but even then like the volumes were very, very small. Like, I mean, like there just like wasn't, I don't know, like maybe like 50,000 coin a day would trade at like $1,000, right? So what is that, like 50 million bucks? Like even if you're trading the whole float, like it's not that much money. Yeah, so that's kind of, but back then the problem was you couldn't really get banking. So like the big hurdle was like nobody could get access to a bank account. And if you did, like if you were doing activity, the bank was like shutting you out like pretty quickly. So like the whole industry was like pretty cut off from like the fiat side of the house. So that was like a colossal amount of years were spent just like trying to like get access to like the banking system.
Do you think that's what gave Coinbase their real?
Yeah, 100%. I've said it multiple times. Yeah. They Andreessen leaned on Silicon Valley Bank to give them that bank account, and that gave them like a monopoly in the U.S. for years. That was their big like. I mean, look, they iterated and they still landed the ship. Like they did build what they said. I'm not trying to take away from it, but that was like their competitive advantage in the early days that just like separated them from Kraken in particular, but even like other ones. Also back then exchanges used to like blow up constantly. Like you like every 6 months, like an exchange would just like disappear. Like they were getting pops left and right, and there was like no recourse.
Oh man, such a different time. I mean, I've spoken to some programmatic traders and stuff that said that they played around a lot in those days, but it wasn't until like 2016 that the volume really started increasing and it became profitable to trade.
It was like I mean, I even knew this at the time. I was taking a leap that this would like have to get bigger because it couldn't stand on its own at its current price. Like none of the exchanges operating, like if the market stayed at that price and volume, like could survive. Like nothing. Everything like didn't make sense unless like the market grew. Like none of it was like justifiable. Like you couldn't like look at it as like a business plan and be like, I'm gonna like run. Like if you had all the volume, you still weren't like covering your costs.
Mm-hmm. Mm-hmm.
So
Wow, what a different time. I mean, I'm a later cohort in the 2017 cohort, so I kind of almost look at that age that you guys had with a little bit of nostalgia when I talk to people who were there, because it was so much more of a, this is a bad way to put it, but it was like bros. It's like everyone was there because they thought they had an inkling that this was going to be something, but it wasn't there yet, and you kind of had to have that early intuition to be a part of it.
You were taking a ton of risk. Yeah, everybody was like really, and then 2014 to like 2016 is like bad. Like it gets way worse, right? Like price goes down and volume goes down, like basically every month over and over and over again. So like it basically like everyone gets excited in 2013 and then it's just shitty for like 2 years. And like a lot of people left. Like a lot of people had jumped in that like bounced back out. I was at Circle at that point, yeah. But it was bleak. Like it was very bleak in 2015.
What was Circle doing at the time? Were they an exchange? They had like the app?
They had the retail brokerage. You could buy and sell Bitcoin in it. But there were like days I remember looking at it and be like, all right, like we like you'd look at like Bitfinex was the big exchange, and Bitfinex will literally trade of like 2,000 Bitcoin, and it was like $500, right? So like you had so, but you're like, dude, like, what are we doing here? Like, this is like dead. And you're like, what are we doing? So you got $1 million of like volume on the exchange, and it's like there's nothing here. So like there was, Bobby, I remember talking about it. Like there was a period in 2015 where it was just so bleak, and it was like, is this like over? Like, are we gonna make it?
Were you ready with your wife at that time, or was that?
I got married. I was married then. So like I've been with her since I like started doing the crypto thing.
Nice. Did you ever get any comments like, "Oh, you were at this really good hedge fund, and now you're at this crypto startup"?
No, she kind of. I mean, we were young still, so like there was enough time that I could like rewrite my life back. Which is why, like, I think you got to take those risks when you're young, because like you can't do it later. You got married, you got a couple kids, you got like a mortgage. Like it's just like harder. But like if you're 25, 26, like whatever, you like waste 2 years, like you waste 2 years. You could always like jump back in. Like just be like, look, I was wrong. I like took some risk, and nobody like holds that against you. Like as long as you're not doing anything like nefarious, like nobody's like, well, like you went and did that crypto thing for 2 years, and be like, yeah, that was dumb, right? Like I mean, you could just always like pitch it off. So I wasn't super worried about it. But yeah, like it was clearly like it definitely didn't seem like the right trade for a while.
When did CMS happen? What was, I mean, obviously what, you have Julian, you have Bobby, these guys smart, but how did you guys come together and do it?
So Julian worked with me way back even at the hedge fund, and we had like stayed in touch. So that was like we'd been in contact thread, and he came over to Circle towards the tail end of it to help me out, and built a lot of the infrastructure there. Basically, like Circle was at this point where the market had gotten bad in 2018. They were having a lot of trouble raising money. It was unclear what businesses were going to like continue going forward, and they ended up getting the stablecoin worked out great, and that like, was like a great story. But like they bought the Polo, which had not worked out well in the bear market. We were getting bled out because they needed to take our capital to like operate the rest of the business. So and there was just like
trading firm capital, right?
Yeah, like we were getting drained out every week, a big number. So I was like, this is just like not like it's unclear. Like this is going to be a place that we can like run this business going forward. And Bobby was looking to make a move from Cumberland at the time too, and like we had traded a ton through 2017, so like we knew each other real well. So yeah, we just were kind of like, all right, like I think we can just do this on our own, X the customer flow, because we didn't want to be dealing with the customer side of the house. Yeah, and so we just like spun it up. We got going 2019 summer, and then I had like helped Circle sort of like transition that desk through, and then they ended up selling it to Kraken, and I think we like were officially live like October 1 or something of 2019. So there was like some paperwork and stuff that we had to like get set up. But yeah, and then we just sort of hit it. We got lucky, right? Because it ended up really bad at first, and then it was all right. But like we hit the market at a good time that things were on the upswing, and like alts in particular were so battered that like people were just like, they're never gonna, like, tokens are dead, like it's over, like nobody's ever gonna do that again. And we were like very much like not of the opinion that was gonna happen, which like worked out well because we got cheap basis on a bunch of like bets early. But COVID happens within like 6 months. So like the world just implodes. And like we did really well because of the like basis got really wonked in like the 24 hours like of the COVID crash. Like it, like shit just like really broke in weird ways on the exchanges, and we were just like able to capitalize that. So we came out of the COVID crash like flat. And then we were able
everyone
to
else
like
was
run
dead, and
right.
no one else was
And
around.
we had balance sheet to like run it. And then like we just like caught the like wave higher, so it sort of like worked. But it was like when COVID was happening, I was like, this is like unclear. We're gonna like, right, because it was like very unknown, like what the hell was gonna happen to the world. So, but it ended up being fine. But yeah, that was like dicey for a period. And we'd like just hired a couple of guys, and I was like, we're gonna like have to like let these people go like immediately. I was like, what are we sort of doing here? But yeah, that was kind of like the path on it. And it had really good path dependency. We got like lucky on like sort of like the timing of the whole thing.
I mean, and you guys are all really talented, and you guys have absolutely crushed, which is awesome.
We had seen enough market crashes over like I think what shocked people, I think, about the COVID one was like people just didn't think it could go down as much as it did, as fast as it did. And I was like, this is like a lot, and this is like a big fucking flush, but I was like, this is not like unheard of in crypto. Like we sort of like had in our risk sort of like params like that this was like a possible like thing that could happen. So like we weren't like prepared for it's wrong, but like we were cognizant that it could happen. So like we didn't just get like torched because we were like, all right, like this is like a well-known possibility that we can do stuff. So I don't know.
And it just like 13 to 3K. That was the drop.
It was quick. Yeah. I mean, it was at 3K for like a flash, right? When like BitMEX pulled the plug and like shut the whole thing down. But yeah, it was something like that. But like absolutely, like the Bitcoin move in absolute terms was gigantic. But then like alts like kind of went to zero. Like there was shit that was like actually like basically zero. Like there was just no bid in the market for it. Yeah, it was like
just order books wiped. Absolutely.
Yeah, there was
wiped.
no bid. Like you had nothing to sell into if you like needed to. Yeah, so that was like a dicey. So I mean, in retrospect, it's like funny, but at the time, I mean, the problem with that was like, not only was like crypto dying, but you were like, is the fucking world dying? Like I was like, the equity markets are rolling over. I was like, what is going to happen in like the grander scheme? Like we gonna actually just like shut down the country for like an indefinite period of time? So there was a lot of like outside risks that you normally didn't have in, which was new because like crypto had beta to like big stock market moves, but it had never dealt with like a real like panic like it had then. Like
that's
that was
really
the
when
first
the correlation started, right? Like that's when people is that right? Like I want to say people started tracking the S&P correlations, or was that later?
I think people just started tracking it because the S&P was moving around so much, but like it had been tied to like Qs like historically, like definitely on the way down.
Yeah. I remember just being at my job and with my boss looking at American Airlines down 60% or something.
Oh, it was bananas, yeah.
And being like, what the fuck is happening right now? I am grateful for that crash though, because it's what got me hired. They needed help because it made so many customer support claims that, it got me the call. And I will say to Dan's comment about, taking on risk and doing things when you're younger, I do have a big thank you for you, Dan, because I think a good amount of the advice you gave me back in those early days when I was 24, figuring all this shit out, actually helped me, helped me build out my career and kind of get to where I am today.
Well, that's good. I mean, look, like I said, you got to take it when you can.
Yeah, got to go for it. A couple more things before I let you go. One I wanted to ask you was, we sort of touched on it on the general terms, but a little bit on the price action itself that we've been seeing, kind of this condensed time bubble since the Trump coin launched, and everything felt euphoric, everything was going up. Then the Melania coin came out and everything dumped, and just having these crazy swings. Why do you think it's been the way that it has been the last month or two?
So I think there was a lot of run up into like Trump's inauguration, right? That everything is going to be great and like perfect and like happen, and then like government's going to be buying coins and all that jazz. and like then like reality and expectations like never meet to that. So I think that's like a lot of like what the whiplash has been. I mean, the meme coin stuff, like there was just a ton of like money that got like sucked out via the Trump, Melania, Libra, like all that stuff. Like to get back to your point, like it went from being like fun and like a game to like very extractive, like very quickly. And like I think it just took a ton of money out of the system and like really bodied like the longer tail of like the risk. So like a lot of people got like hurt there, and like that bled into like sort of other stuff. So I think those are like the two big things. I mean, we got the summit this week, right? So like maybe like Trump's back at it.
That's when is that? Is that
March 7th? So March 7th. What is that?
4 more days.
Yeah, 4 days. I have no idea what is going on there. Like, nothing. Just that he's having a summit.
What the fuck was the Cardano XRP? Like, is that like they just donated a ton of money?
Like, whatever you feel about Trump, it's like a pay-for-play administration. So like, this shit's gonna happen. Like, you see it with the World Liberty thing, right? Like, there's all kinds of like shenanigans, like move and whatnot. Like, there's gonna be more of that. Like, we're not gonna shed that.
Yeah, that's interesting. Yeah. Hey, at least a lot of American retail holders, all the retail I know have fucking XRP and Cardano,
right.
So
he's getting the American people.
It's pretty crazy. Last question for you, Dan, as we close out. Man, you actually look the healthiest I've ever seen you. You look younger and stronger than 5 years ago.
Great, I love that. Thank you.
What's been up on the health side? Do you have any habits you've taken on? Anything you can suggest to the listeners?
No, I mean, like, I don't really travel and I don't really do the conferences. I think it's just, I mean, look, like I said, like I got young kids, so like that's kind of dominates my sort of life in a good way. So I think like that just keeps you focused to not like I'm not out like raging or doing anything. Like I keep it pretty simple. So I think that's probably the best.
All right, KISS principle. A lot of home cooked meals. Do you eat at home mostly?
I mean, well, you got it. Yeah. So that helps. Yeah, I would say I'm getting a ton of sleep, but that's not true. Like the kids are all over the place, and I wish that were the case. So you get it when you can.
Right on, Dan. Well, thanks for coming on. It was great having a chat.
Thanks for having me.